In oral arguments yesterday about whether the president has legal authorities to issue tariffs under emergency economic powers, the Supreme Court justices seem to express some skepticism about the administration's arguments, even some of the most conservative justices on the bench. What was your reaction to those arguments? Are the tariffs in danger?
Well, I mean, certainly the court asked a lot of questions, and the president has worked incredibly hard to address what clearly is an emergency situation with our trading partners as it relates to historically large deficits and also issues as it relates to national security. And the administration, as Secretary Bessent said yesterday, does believe that we've made a very powerful, compelling case. We do believe the court will rule in our favor, that the president has the ability to decide what an emergency is. As it relates to foreign policy, the historical record is clear. The president has that bandwidth. It is a signature legislation, so to speak, or one of his signature policy initiatives, along with the One Big Beautiful Bill. And historically, the Supreme Court acknowledges those sorts of things and does tend to agree with the administration on these issues. But again, we do believe the president has the authority, and we're hopeful that it will be resolved in a satisfactory way.
I know you just said, Joe, that you think the court will rule in the administration's favor. The president has called this case literally a, quote, life or death decision for our country. And certainly the tariffs have been the economic centerpiece of the president's economic agenda. What is at stake here if the high court were to knock this down?
The president said it the best. This is really would be an historic ruling if it was to go against the U.S. These tariffs, look, Jennifer, the IEPA, the International Economic Emergency Powers Act, gives the president the authority to regulate imports. That means if he wanted, he could put an embargo on against a particular country to have none of those goods come in. A tariff effectively works the same way, but works in a more nuanced, more effective, more surgical way. And this policy, if it's reversed, is going to undo what the president wants to do in fixing the emergency, getting trade deficits down, being able to have more national security, which is interwoven with economic security in the U.S. And the IEPA is a key tool to do that. We won't be able to reindustrialize. We've got capital coming in. It's coming in because of the tariffs. We've got the One Big Beautiful Bill, which kept the Trump 2017 tariffs, taxes in place and tax policy in place. We've got cheap and abundant energy, business deregulation. So as you said, the tariffs are a centerpiece. The president's exactly correct. If the court mistakenly were to rule against us, that would cause unnecessary economic pain and hardship. We're hopeful it won't happen, and we'll see what happens.
Just to dig a little bit deeper on what you just said there, what type of economic pain could we see? I mean, yesterday I spoke with Federal Reserve Governor Stephen Miron, who said at the very least it would increase uncertainty and drag on economic growth. What supply chains, to your point, are being resituated as a result of these new lines that are being drawn by tariffs? We've collected nearly $200 billion in tariff revenue as of September 30th. If you could expound on what kind of economic ripples we could see as far as recession or not, please do.
Yeah, well, Governor Miron made some very good points. I completely agree with him on that. But even Justice Barrett talked about, well, how would you even give the money back? How would you give the refunds back? It's a very complex issue. There were some third-party providers that were responsible for collecting the tariffs. How would it work? How would you disperse those funds? Financial markets, which initially were nervous about these tariffs, they were nervous about President Trump's policies, have cheered those policies. Yes, so to the extent that the policy would be reversed or watered down, that would damage financial markets. It would damage confidence. The system, the economic system, capitalism works on confidence. You've seen record high equity markets. You've seen record low credit spreads. You've seen commitments by all different countries and companies to invest in the U.S. Everything works hand in hand with what President Trump's vision is to reindustrialize and rejuvenate the U.S. economy and build things again. So I'm an optimist. I don't want to think about, the worst case scenarios. The president has been very clear in what he says and what he believes, and we're totally on board with that. keeping our fingers crossed and figuring that, common sense here will prevail.
Fingers crossed, common sense prevails. But in the worst case scenario, does the administration have a contingency plan in place? For instance, could we see more tariffs enacted for different sectors under Section 232?
There are various, as you know, there's 232, there's 122, there's 301. There's a variety of different sections. The Treasury Secretary yesterday mentioned he didn't want to go into the details, but he is well aware and very well prepared in the unlikely event that the case was not to go the way we wanted, that these tariffs would be put in through other avenues so as to accomplish the administration's goal, which has been incredibly popular, obviously, with financial markets, investors, American people, because again, you're going to reindustrialize. You're employing Americans to build the factories with the foreign capital that's coming in. They're going to be employed by Americans, but there will be contingency plans put in place at some point should the court rule improperly.
Switching gears, Joe, the government shutdown is now officially the longest on record, day 37 today. Any sense of how much longer this could stretch on? And what are we dealing with as far as the economic impact so far? If this continues on much longer, what does the economic impact look to you then?
Well, the president, with Secretary Bessent's help, we've been able to pay the military. That's not going to continue. He has another payment, I believe, coming on the 15th. SNAP benefits, which people need. The Democrats are preventing us from fully giving those benefits out to folks. There's been some chatter in the news this past week, some comments that I think Leader Thune had mentioned that makes me optimistic. Maybe we can get something solved soon, that some of the Democrats, some of the centrists, there are a few, will come over to our side. I mean, we don't have the 60 votes necessary to reopen the government. And that's a problem when the Democrats, who historically would support these clean continuing resolutions, it happened numerous times over numerous administrations with Republicans when they were the minority party, 15 times to be exact over the prior 4 Democratic administrations. This is the worst sort of politics. It, like I mentioned with the Supreme Court ruling, adds another layer of uncertainty. It causes businesses at the margin, Jennifer, to step back, to not commit capital. That means then less hiring, less output, less growth. CAA said we could be losing upwards of $15 billion a week. That could translate into half a point on GDP over an extended period of time, and even more if this shutdown, God forbid, were to go through the month of November when people are trying to travel and visit their families. Secretary Bessent perhaps said it best. We just need a handful of Democrats to do the right thing, be national heroes, and vote with us to reopen the government. Then we can have the discussion on some of these other things that Democrats want. But this is not the venue to close the economy down, not have hardworking men and women in our armed forces and elsewhere not get paid because of a desire to demand a vote. It's very juvenile on the Democrats' part.
And before I let you go, Joe, Secretary Bessent said over the weekend that he feels that there's a chance that parts of the economy, particularly housing, may be in recession already because of high interest rates. Is Treasury looking at taking any action, whether it comes to bill issuance or otherwise, to bring down yields and thus push down mortgage rates?
The Treasury increased bill issuance because it had to rebuild its Treasury balance, and the bill issuance now at around 20-ish% of total issuance is about in line with the historical average. I think what Secretary Bessent has made a very compelling case, and certainly this is something the president is certainly 100% in agreement with, is that his interest rates are too high. They're too high by the Fed's own admission. R-star, or the neutral rate, is well below, even now, despite Fed cuts, where the current Fed funds rate is. I am hopeful at some point that the Fed will lower rates further and realize that the tariffs, which are going to be incredibly successful in rebalancing and dealing with the current emergencies that we have, are not inflationary. They've not led to an increase in inflation expectations. The Fed should cut rates, and that in the short term will certainly help housing. And as the Secretary said, there are some sectors that are weak, and housing is one of them, and interest rates are basically the most dominant variable there.